subscribe to the Admirals channel. Make sure if you find the content useful, give us a like, or if there's feedback, you can give us a thumb down. You'll also find links beneath this on YouTube, giving you links to Admiral resources. But as I say, great to have you all here today. Thanks for joining us for what is going to be a kind of an equities and indices driven session, where we are going to talk about who have been the winners and losers in the kind of post-pandemic reopening of economies, markets, countries, for want of a better word. So there's an awful lot there that we could cover and we could discuss, as always, and we can only touch on a little piece of it, but it'll be enough to give you a little bit of insight, a little bit of help, and a little bit of support with your own trading choices. So if you'll bear with me a moment, what we'll do is we'll switch across into the slides. Okay, we'll have a look at them, and then if there's time at the end, we'll have a little look at the live markets as well. As I appreciate that always helps people, so be sure to stay with us to actually look at the live markets as we go through. So just going to bring up my screen to share with you hopefully that is all coming up there. Hopefully you can all see and hear me okay, and see the slides. That's always a good start for us, isn't it? But as the title implies, the winning and losing stocks from the post-pandemic reopening, and what can we learn from these stocks and industries? That's what we're particularly looking for today, isn't it? And it's a case of us recognizing that yeah, it's been a pretty eventful last 15 to 18 months, hasn't it? And such, and it's taken its strain on us all in its own way, as it has done on financial markets. Certainly, us here at Admirals, we hope that you're all healthy and safe and well after this challenging 18 months, and we're really chuffed to bits that you're here today to basically to help sort of learn about another aspect of trading and investing, and how it can actually particularly help you in your own journey. So Admirals, as it says there, they're a Forex and CFD broker with a wide range of instruments you can trade with. They've got global presence, but with local support. They are licensed and regulated across a wide range of regulatory environments and entities, providing competitive spreads on the most attractive trading products, and giving you the opportunity to engage with markets using MT4, MT5, and also Admirals Supreme Edition. If you've got any questions about Admirals, be sure to get in touch with your account representative, and they'll be very happy to help guide you. And also nowadays, okay, we are able to be sort of followed on Instagram. Okay, so Instagram's where the action is. So be sure to come and join us there at Admirals Global. Go into there on Instagram, follow us there, and you'll find a swathe, okay, of posts from the Admirals team there, just giving you great insight into markets, and also great insight into future sort of webinars like this, but also the kind of the myriad of resources that are available to you as a client of Admirals. So what are we going to talk about today? Well, there's been winners and losers through this pandemic, and that's what we're going to focus on. All right, who've been the winners, who've been the losers, which industries have suffered, which many of them might actually sort of you'd recognize yourself, maybe others new sort of a new way of thinking, which industries, okay, and stocks have particularly blossomed, and importantly, which ones will continue to do so. All right, that's what we really want to look at, and I'm going to give you a little bit of a slant on that, okay, a little bit of a hint on that in terms of how we could look at that and how you could use that and take it away. But whether you are a trader or whether you are particularly an investor, because actually the two can be very, very different, and we're going to touch upon that a little bit later. So for those who don't know me, my name's Paul. I've traded for many years, traded across a wide range of asset classes, traded for funds and for high net worth individuals. For most of my own trading, okay, for longer term swing and position trading, I'm a trend trader. And then for my shorter term intraday trading, I'm very much about reversals and mean reversion. So the winning and losing stocks from the post-pandemic reopening, as always, I appreciate we always have a wide range of experience here in our rooms joining us today, whether you're here on Zoom or whether you're on YouTube or whether you're watching this later, on demand. And I'm always fascinated to understand, our clients, what's their own thoughts, what's their own views, okay? What has been their particular experience? Because I think we can all learn. I've been trading for many years, but the moment you think there's nothing left to learn in trading is normally the moment you're about to get a very painful lesson. Right, it forces us to stay humble, to stay open, and to continually learn, and to be continually ready to embrace new ideas, new thoughts. Excuse me. So, it'd be interesting to know, the people here joining us today, what has been your experience over the last 15, 18 months? Have you traded through it? Have you stayed away from markets? Have you had a particular strategy that you've enjoyed using? Has there been, a kind of a change in the way that you look to operate in markets? Okay, so if you've got thoughts about that, put them in the chat box there. Stick them in the YouTube comments box. We do take it on board. We do like it. We are always open. We're always fascinated by feedback and interest. But as the slide says, it's fair to say that it's been a turbulent and uncertain 15 or so months for both the human race and also financial markets. And the thing is that they are both linked. All right, they're both linked. We live in a world these days where we think that technology runs the world, okay, and that even the financial markets are run by algos. But I'm still old school in the sense that I still believe financial markets are a representation of human psychology. They are a representation of fear and greed and hope. And invariably, if humans are having a turbulent and uncertain times, that will be reflected in the financial markets. And I think it was, okay. I think it has been, and we will look at that in more depth a little bit later on. Not unsurprisingly, there were very clear winners and losers in financial markets over this period. And as economies have slowly reopened, how has that impacted the stock markets and certain stocks in particular? And I'll be interested to hear what, if any, experience or insight you have yourself there. What have you seen? What do you think is happening? Because today what we'll do is we'll take a look at a few of the winners and losers from the post-pandemic reopening, okay? And it's what we're interested to see is that there were clearly some winners and losers during those pandemic periods, but did it continue, okay, as economies and markets have reopened? Has it continued? Or has there been a shift? Or has there been a case of, the sort of, that we've had a complete move, okay, a complete difference, okay, in terms of the trajectory of some particular sectors and stocks and industries? And, and that's what we're here to have a little look at today. I mean, that's a big, broad canvas there that we can paint there. So we can't go into every particular stock and sector industry, but what we'll do is we'll just look at a couple of the big themes so that you can take away and you can start to sort of maybe do a little bit of research, a little bit of analysis, just add them to your own particular watch list. Okay, maybe you might even differ. You might look at a couple of the things I put up and say you differ there, and that is absolutely fine. That's what makes a market. As I said, I'm always interested to hear, what the kind of our clients here at Admirals, what they view, what they think, and how they view the world and markets, because we all have a very unique experience. So here's a filter. Should we call it a filter? Yeah, let's call it a filter for today. When we're thinking about, which were the winning and losing stocks. When we look at these particular sectors, industries, when we stop, we have to make a decision. Right? And this is actually crucial. This is why I'm sort of raising this right now, okay? Because when I'm looking at this, what I have to think of is, are we a trader who is looking to follow momentum? Right? Is that true? Is that what we're going to be doing? Is that just a case of we're going to be trading kind of shorter time frames? Okay. And that shorter time frames, that doesn't mean scalping or trading for minutes. Okay. You have to wait another couple of weeks till I do a webinar on that. Be sure to look out for it. Okay. And join us. Well, we're talking about shorter time frames. Shorter time frames may be days, weeks, even months. Okay. In terms of a shorter term trade, as opposed to, are we a value investor, okay, who is looking to pick up cheap, or relatively cheap stocks, which you might hold for 1 to 10 years, maybe even longer. And this is important, okay? And it is important because it's an important thing to know which one you are before you pull the trigger. All right. And I say that because sometimes new, inexperienced traders, what they do is they want to be a trader. All right. They want to be a trader because they think, it's exciting. They think that, there's a chance to make money faster. But actually, when the trade doesn't go their way, well, then they just ignore it. They just turn and they just say, oh, I'm just going to leave that as an investment. I'm just going to forget about it and I'll come back to it. Okay. Hoping that basically that position will turn around and bail them out. That is not a good way to engage in financial markets. Okay, that is not a way that even myself or Admirals or anybody else, okay, would in any way condone. Okay, and so it's actually important to sit down and spend a little bit of time thinking beforehand. Okay, when you're looking at these sectors, am I a trader who's just looking to follow the momentum, whether that momentum might be bullish or maybe that momentum might be bearish? What am I? And if you are, what I suggest is you sit down and you write down yourselves just a few simple rules. Okay, just a few simple rules that might just be about a trader trading swing position trades that is looking to follow momentum, as opposed to someone who is effectively a value investor, someone who may not have the time or even the inclination, okay, but is just thinking that, on a timeline of maybe 2, 5, 10 years, that some of these stocks, okay, that have been battered, for want of a better word, during the sort of during the pandemic, okay, of the last 15, 18 months, they are looking cheap relative to other stocks, even cheap relative to their own price, their own price history over the preceding years. And so it might be that you're an investor who basically decides that you're investing certain amount in buying that, what might be a stock, maybe even an ETF or something like that you would then stock and hold. Okay, you are a value investor because you think that stock at this moment is cheap historically compared to either itself and also compared to the market. And so, as I say, it's important to define which one you are before you get stuck in. Don't just go wading in, all right, just looking to buy something. And equally, don't just have rules that, you're going to try and trade it. And if it doesn't work out, you're just going to leave it and hold it as a position and just, hope it'll come back to you over the next few years. That is not a smart way, all right? It's just not a smart way to operate. You are either one or t'other, okay? And it's very clear, it's almost a case of, you might actually even want two separate accounts. Okay. You might actually have, an Admirals trading account. Okay. Where you're actually able to trade those stocks. Okay. You can do it on you have it separate. You might have a second Admirals account, okay, an invest account, okay, that allows you to basically to effectively hold stocks, maybe indices, ETFs, commodities, etc., on a much longer term basis. Okay, and you can find lots of details about that on the Admirals website. Okay, but it's just sometimes, even as I say, sometimes even having two separate accounts, like a trading account and an investing account, is almost kind of it can help you, because that when you open your trade account, you're a trader. I'm focused on my trading rules, as opposed to I'm an investor today. I have a different way of looking at what I'm actually looking to achieve and gain when I'm a value investor. In this case, you might be a different type of investor, but for the purposes of today's conversation, I think you're either a momentum trader following the following what's going on, or you're, as I say, a value investor looking to pick up cheap particular stocks. So I hope that makes a little bit of sense to you. Okay, I hope that kind of just opens your eyes maybe a little bit. If you've been thinking about this, you can start to think, well, actually, that's actually that makes sense, Paul. What Paul's saying is that it makes sense, because it is. And I would hope that you would just you take that on board yourself. But equally, it'll filter how we will look at some of these particular stocks ourselves over the next 20 odd minutes or so. So, the winning and losing stocks. Who are the winners? Now, I thought I could go into huge lists on this, but the reality is, as I said, that we're the best one in the world. You can't cover them all, but one or two of them have surprised me. Okay, as I said, I'm far from perfect. You'll hear me always say there is no such thing as perfection in certainly in trading. Okay, and you're constantly having to learn and assess and adapt and overcome. As these markets shift and the sentiment changes. Certainly, if you look at who were a lot of the winners during the pandemic were, well, a lot of US tech stocks were, did supremely well. And we did, I think I did a webinar here probably about 6 months or so ago, maybe, at the start of the year, about kind of trading US tech stocks. Okay. And you will find that in the library on the Admirals YouTube channel, that you're able to access it. And as part of that, not only were the winners that, but after a little bit of let's say some profit taking, some of these tech stocks are still performing exceptionally well. Okay. And in particular, the FANGs, all right. Okay. Facebook, Apple, Amazon, Netflix, Google. Okay. They're the kind of like the major ones making up the FANGs. Okay. There's people might change one or two elements of it, but it's generally, some of those major US tech stocks, okay, that have continued, okay, to do well. And you have to ask, is that because those companies are great, or is it a case of, there's just momentum? Okay. There's just momentum, and those particular stocks and a few of those particular sectors have just drawn in the money that has come into the stock market. And that's a point we'll touch on later, namely the kind of influx of money into, individual equities, but also into equity funds. Has it been narrowly funneled into stocks that are already doing well and just helping them accelerate? What we've also seen is, in terms of the kind of post-pandemic reopening, is certainly some companies involved in things like shipping and transport companies. And if you think about that, that's probably not entirely a shock or a surprise, because invariably most of us here in the Western world, or wherever you're joining us from, because I appreciate we have a global audience, we were locked down, and invariably you were buying mostly your food or anything else online for a good part. But of course, you have to realize that there needs to be infrastructure underneath that to support that. Okay. And so for every Amazon, okay, which is in the US tech stocks, there is also a whole host of shipping and transport companies that basically just move all of those elements from all over the world, and they have done well, and they have continued to do well. And part of that is a case of that sort of it's a tilt in supply and demand. Okay. The demand has increased as economies and markets, okay, have reopened, and that puts a further strain on those shipping and transport companies, which also enables them to to charge more and increase their profit margins. Not unsurprisingly, we've also seen online retailers still continue to do well. There was a little bit of a blip, and we thought that as economies reopen, people would want to just go back shopping in the high street. And invariably that has happened, okay, but a lot of that has been driven, excuse me, a lot of that has been driven just by novelty. People just want to get out of their house, don't they? I mean, you've been locked up, cooped up for 18 months. You want to get out, don't you? People want to get out, they want to go shopping. They just want a bit of a change of scenery. But still, online retailers have done very well. We're going to look at the charts there. And also, commodities. Now, commodities have doing well, okay, up until very recently. They did start very well. While we're not really necessarily looking at commodities in particular, what we're looking at is, there are commodities companies that have done well, mining companies have done well, and also it feeds back into that tale about, shipping and transport companies having done well also, because they have been basically, supplying on that. So, these are some of the main winners, which, they were there during the pandemic and even post-pandemic. Some of them, as I said, are still going very, very well, and there is still momentum with them. Okay, and we will look at those charts in a quick moment. Perhaps you might have an idea. Maybe you think the particular stocks or sectors that have done really, really well, or actually have been like a dark horse. Okay, that have come out of nowhere, right, to effectively sort of do well. Okay, so Marcus, and if you have, by all means, put it in the chat box there. Okay, I'm always happy and eager and open to hear how other people view that. But let's have a little look at some stocks. I'm just going to move a piece around here on the charts and stuff so you can properly see. So these what I've just put in for today is just very simple charts. Okay, and not necessarily focusing on elements of technical analysis or fundamental analysis in particular. What we want to be able to see is, right, how have these stocks been operating? Here's Facebook. All right, Facebook, okay, has continued to do well. This is a weekly chart. Okay, this is a weekly chart here. Let me just bring up the old drawing tool here. Okay, and so what I'm considering as, as a stock that has been a winner and has continued to be a winner. It is namely a case that that this here was effectively the kind of the COVID crash, sort of February, March, April time of 2020, and stocks that have basically have come back all the way, and in this particular case gone much further, and have continued to go further, even into 2021. Well, they are what I would certainly consider as they were winners, and they have continued to be a winner, and hopefully you can just see that's very clear. I talk to new traders all the time about how a new chart, all right, okay, a good trend should just leap off the chart at you. You don't need to force it, you don't need to fight it. And you try and force it, invariably it rarely works. Okay, good trend leaps off the chart, and I think it's fair to say that has actually continued to drift its way north. You may love Facebook, you may loathe Facebook, okay, but what you have to do is put aside those points and thoughts about your own personal view of Facebook. You're looking at it here as is it a good business that you'd like to trade? And bosh, you are there, I'd say. And this is this is the thought, for me, when you're looking at that, is that more appealing as a momentum trade, or is that as a value investment? I would suggest it's the former, not the latter. In this particular case, it's in a trend. You'd want to trade with that. It's not particularly cheap. It's hitting all-time highs, so it's not cheap in any way, shape, or form. But your view might be that it's cheap today compared to where it might be in 10 years. And that's your prerogative. That's your particular choice. But my initial view would be that this is a momentum trade. If we look at Apple here, this is once again, as I said, it was. There's the let's just get the tool there. Here was a COVID crash. It clearly came back there. It clearly went much higher. It pushed up to new highs, at the start of the year, and I actually thought, well, maybe it's coming back, but it's still making higher lows, and you can see for yourself that it is actually it's climbing back, and in terms of its closes, okay, weekly closes, which is something I take great notice of, it is closed. It closed, at a high there, okay, last week, and it has continued to, and you can see that, okay, it's pushing its way up, and so there is still clearly momentum in Apple, and I suspect that if you should get back up above there, okay, 145 area, okay, and keep holding, well, it's just going to keep grinding its way up there. So it's definitely, that's the second part of the kind of the fangs there that it is part of there. Excuse me. Looking here at Amazon, okay, Amazon on the weekly chart, that was, look at that. I mean, that was the COVID crash. Look how small it was, because every man and his dog was, sent home and buying stuff from Amazon, and it blew through. Okay, it blew through its recent high, and you can see it went up well. But actually, it had been in since about September, October. It actually, you can see it been in a little bit of a block there, hadn't it? Just consolidating. All right. Remember what I was saying. Okay, good trends should leap off the chart. Good even periods consolidation should leap off the chart. If they don't try and force it. But what do we see here is that actually price has basically broken out last week. Okay, price broken out and it's moved on, and it's effectively sorry about that. I'm clearly a popular guy, so it's kind of broken out there. So that's something for us to consider and to take on board, and to think about. Is that a case of is there going to be a false breakout, which is something we talked about a couple of weeks ago? Or is it going to hold up and carry on there? In which case, the momentum will carry it on, and that is something that you'd be looking to put onto your momentum trade list. We have Netflix. I could have put Nvidia in here as well. Okay, to be honest, that would also make a part of the fangs. But I suspect most of the people here, if they're new, they're more likely to understand who Netflix are rather than Nvidia, the chip maker. But look at this, here we go, COVID crash there, but it clearly broke through it. Not a surprise, everybody's stuck at home, watching Netflix, and a little bit like Amazon, okay, what we have done there is We've gone into a block, all right. You can see there, it's just tapping there. There seems to be around about 480, okay. There seems to be, you can see, probably see there quite a lot of level of support there over the last couple of weeks. You're looking at that. There's been a bit of momentum there, hasn't there? Just been a bit of momentum come back in. Once again, for me, all right, I'd be saying, it's a momentum trade, and you'd really still, it might be a momentum trade up to that level, and if it gets above it, holds it into new, well then, invariably it's it'll be breaking and pushing to all-time highs. That's what we look at. I mean, it's the less, I would say, it's probably the least impressive of the fangs, okay, but it's part of that game there at the moment. But then, here we have, here's the kind of one of the big gorillas, the big silverback gorillas there. Here we've got Google, Alphabet, still Google on the stock ticker. And you can see for yourself, all right. You know this, you've seen this, okay. It's it crashed, it broke through it, and it has continued to. All right, it has continued to just grind its way up there. Okay, it's in a very effective kind of bullish channel there. All right, it's it's just charging its way up there. Okay, and you can see for yourself. That's a momentum trade. Okay, this is not cheap. I say it's not cheap. Okay, but people might say, well, this is cheap compared to where they think it might be in 10 years. All right, but I look at this today, and I would look at that. Then there is momentum. There is a trend. I would be a momentum trader. Okay, to look to take advantage of that for Google. And in terms of some of the other winners, so I said earlier, some things like shipping and shipping and transport companies. There's Glencore. They are a shipping company, okay. And you can do your own research and understand about how they how well they have operated. And this is a kind of an interesting one, right? Because what we saw is that the kind of the recent high before the COVID crash was here, and then we're putting this lovely double bottom here. And then, we got back up to that level and sort of, took some time off it, bounced off it. But then, as you can see, we've actually raced our way up here, and we have been moving our way up here, and it's a case of now you can see it's up there at $20. Okay, so it has done very well this year. It has done very, very well. You can see that has just accelerated. Remember what I was saying is, as markets and economies are opening up, what you're finding, the kind of shipping costs are going through because the demand, supply and demand, the price has risen. It's come off there, okay, and so I personally would be looking at that, saying I would be wanting to see the momentum kind of push its way back up towards that $20 mark, and what does it do when it gets there? So this would be it is on my watch list. This is on my watch list to see how this particularly plays out. But it's just an example of how you can see that this year, okay, it has done very, very well, okay, as markets and economies have reopened. And part of it is like online retailers is Shopify. Okay, so e-commerce platform. Not really a surprise, is it? Okay, that it's done very, very well over the last year or so. Okay, so from as I said, COVID crashed there and it's broken through this. It was into new highs. It's come through, and bosh, you can see for yourself. Now, I'm as I said, I'm not perfect. I was actually of the view here that maybe the journey was done, okay, on Shopify. Okay, I wondered if maybe we had a kind of head and shoulders formation building there, okay, on the weekly chart. The price had pushed up there, and I was wondering, was there a head and shoulders, and were we going to actually get a move down? Remember what I was saying earlier, thinking it's like, as in, people just out of pure novelty would maybe do less online retailing because they just want to go to the shop, because they actually just want the actual physical shop rather than shop the stock ticker, all right, to actually just have a different experience, to actually get out, okay. But as you can see for yourself, the kind of that head and shoulders didn't play out in any way, shape, or form. All right, I always thought that the kind of 1,000, the big round number of 1,000, would be a there's a real section there. If it broke that, well then you might actually get a $300 drop, I thought. But you can see what happened here. It turned and it's gone, and actually, having tapped, all right, what we saw is having tapped, okay, the previous high. Well, we are just trading above it. Okay, it's had some good news recently in terms of good figures and what have you, and so it's basically tapping on there. And remember what I was saying, I like to see how weekly closes. So, for example, for this week, I'll be interested to see how does this close this week. Okay, does it have the ability to close above its recent highs? Okay, holding above that. For me, that becomes quite a bullish move there. So, as I said, that's online retailer there. There's still clearly lots of people doing business through it, and also as traders wanting to be on part of it. And if we look at, the kind of a broader picture, okay, so this is an ETF, okay, an exchange traded fund. My colleague Jens has done quite a few videos on ETFs, okay. You can find them in the Admirals webinar archive there on YouTube. But this is iBuy, okay, which is an ETF focused on the online retail space. And you can see for yourself here, I think we talked about this maybe probably about a year ago, is that actually, for a long while, it wasn't doing anything terribly exciting, okay? Then you had the COVID crash, and then bosh, down to around about 30, 35, and you can see it's just been one-way traffic since, hasn't it? And, that has been quite some journey, hasn't it, ladies and gentlemen? That's quite some trend. As I said, you want a good trend that's going to leap off the chart at you. That's what you're after, okay? That's what you want to see, okay? That's what you want to see. And, it moved there, but I remember I was saying is that actually it come off its tails there a little bit, okay? Come off its tail. And as I said, I thought, perhaps because of markets reopening, actual physical shops, high streets reopening, we might see a drop, and we did. But once again, you can see it's just grinding its way. It's grinding its way up there again, isn't it? It's grinding its way up, and this might be something to watch. This could give you a good indication of things like Shopify and some of the other e-commerce companies. Okay, how they're going to fare over this particular summer. Will iBuy head back towards 140? Or will it kind of struggle at 130? So for me, this is right on my watch list at the moment. Okay, but it is that is just that has been fantastic. That's been an absolutely fantastic move. Okay, that's just quite stunning, isn't it? In terms of its its trend, which is exactly what we like to see. As I said, don't force these things. Okay, let the good trend leap off the chart at you. Here's an example. Remember, I was saying commodities, okay, commodities companies, and the not only the commodities, the miners, the organizers, the shippers, etc. And one of those is Glencore, okay, and you might be looking at that chart and say, well, Paul, where's the excitement in this? But remember what I was saying at the start here, okay? It's what I'm interested in is how did it during the pandemic, and has it closed, or has it traded back above its pre-COVID high and continued to move higher, which actually Glencore has done. For years it was, you can see in a real long down channel there. Okay, I apologize for my trend lines, but you get the gist. All right, as I always say, I'm a better trader than I am an artist, thankfully. All right, but we had a beautiful descending triangle chart pattern here, okay, coming into 2020. Price dropped to the lows of COVID. We drifted back up, put in a kind of an oblong, an extended 1, 2, 3 pattern, and then, but if we looked at the highs of the year, it got back up there, didn't it? 240, came back up above it, came down, tested it, and has continued. It has continued to work its way up. Slowly but surely. All right, I'll be watching it there at the moment a little bit, but it has continued to do that because there has been demand for commodities. Okay, there has been that demand for commodities, and that is what we can. That's what we've seen there. So this for me is something that is it is going in the right direction, and it's clearly something that can trade. It can trade much higher. So this might be something that you add into like an investment play that that you'd look to sort of to work with it if, as we see the a real commodities boom, which is something we touched upon probably early at the start of this year. But I think I did a video on that. And one other side of the that kind of commodities boom, as I said, this is Caterpillar. Okay, Caterpillar. They make diggers, right? If there's a commodities boom, if you want to get gold and copper and the likes out of the ground, you're going to need a digger, aren't you? You're going to need proper big diggers, okay? And and all the kind of heavy engineering that goes with that. And this is one thing we can look at here in Caterpillar on the weekly chart. Looking at the pre-COVID high there, yes, it did drop off. Yes, it put in, again, 1, 2, 3. Then it broke that high and closed above it, tested it, okay, at 150, and you can see it's been moving. The question is, interestingly now, is that you can see the last couple of weeks, all right, that it's actually just come off those particular highs. And so now, my eye sort of starts to look at, well, this section here, $200, $200, okay, is that gonna be a line in the sand for us? And so I think, as long as it stays above that, I think that is, that could be a good longer term play. But equally, if it broke that, well, then you might be looking at, the initial momentum trades to the downside until it gets back to a price, okay, that people would consider, to be good and fair value. Okay, so it's one to watch, okay, to see how this actually plays out over the next couple of weeks and months over the summer. So there we had, I said I wanted to go through a few of the winners there for you, just to have a look at that, to give you an idea. Some of those sectors, some of those industries, some of them that, some of them are, I would suggest, some of them are a little overpriced, and so you're looking at them as a momentum trade, because there's momentum there, and you don't want to fight that. You want to sort of try and find a ride it, but maybe one or two of them you might see, well, if there's some profit taken, it might come down to a point at which point you might feel that it is a value play for you. So who have been the losers then? All right, there's always winners, there's always losers. Okay, when I look at that, we looked at online retail there, didn't we? We looked at online retail, and then we've also had we've had like food retailers have done pretty well. They all held up. But what we had was maybe consumer discretionary was, invariably struggling a little bit, because people were worried or concerned for their jobs. So in terms of and plus they couldn't go to shops. So invariably their consumer discretionary spends were depleted at times during the pandemic. Not unsurprisingly, a lot of the companies that, are travel, okay, hospitality, holidays, etc., they have continued to struggle. Okay, they have continued to struggle. Okay, and also one of the interesting ones is Tesla, which we'll look at there in a moment. Okay, so as I said, you might have a different view. You might even consider other particular sectors and stocks that are of relevance to you. That's absolutely fine. As I said, we're a little limited in terms of we have like 40 minutes or so it's a case of trying to pack in as much as we can. All right, in the time allocated for us. So here's Tesla. All right. So you might be looking at that chart and saying, Paul, that doesn't look like a loser to me. And it all depends upon your frame of reference, doesn't it? All depends upon the point that you're actually coming from, and that's what's interesting. And certainly, okay, when you would look at it initially, okay, there was the pre-COVID high, there was the dump, and you'd be saying, Paul, do you know what I mean? If you'd have bought into that, you'd have done well, and you would have, and absolutely, I don't deny that. As I keep saying, good trends leap off the chart at you. All right, a good trend leaps off the chart. What is kind of more interesting is that is to see what's going on there with the price now. Now, what we saw here, okay, towards the end of last year was price had been in a pretty good uptrend, and then it sort of it's kind of coiled up. It went into a block, and then it accelerated away. Now, what I'm always interested in is you can see that there's been a very long trend line there. When price starts to accelerate and go almost vertical, okay, if you're already in that trade, well then fair play to you, well done, you ride it and milk it for as long as you can, and fair play, you won't get an issue with it from me. But equally, if you're not in that position, when I start to see price, pulling away from long-term trend lines, starting to go vertical, okay, my own view is that it's unlikely to be able to defy gravity for too long. Okay, we can all try, but we're normally pretty rubbish at it, and I think that's what happened here. And price did push to that fantastic high, but then it printed here, a bearish engulfing key reversal candle there. There was also issues, okay, with Tesla itself. Tesla basically, Elon Musk came out and sort of, he started tweeting an awful lot about cryptocurrency, Bitcoin, how they basically bought Bitcoin. Okay, he was also kind of rushing towards getting into sort of the getting regraded, okay, in terms of the Teslas, the company, moving up higher up into the stock indexes, because then they thought it would actually be beneficial for them in terms of companies, funds being forced to buy Tesla as it started to enter into, as it started to go on to the effectively the let's call it like the approved list of stocks that that funds would buy. But actually, that has not worked out this year. Okay, and hopefully you can see that already. Is that having been up there, from highs there around about 880, it's traded down as low as about 560, 550. Okay, and what I notice is, I personally notice is that we're getting we are getting lower highs at the moment now. Of course, this could change rapidly, but personally, I kind of am looking at that kind of area there. So as I said, once again, my trading's better than my artistry. Okay, I look at there as there's a kind of like a demand block there, support there. Okay, around about kind of 560 to 600. That's what I'll be looking at. If we come down, it wouldn't surprise me if looking at the price, if we came back down here and ever decreasing bounces, okay, providing a bit of a descending triangle, in which case I'd be looking to see could it break lower there, in which case as a momentum trader I'd be looking to trade that to the lower point. But as I said, if that price does collapse, some people will look at that and say, well, that is cheap relative to highs we have seen with Tesla. That you as the old saying goes here in the UK, you pay your money, you make your choice, and that's what you'll have there. Okay, so I would just be looking at that. I'm looking at that price action there because I think we're at an inflection point. Okay, and for me, that's what I'm actually always looking for. I'm looking for points where the market has to make a decision, because that's where I'm looking to find the market's going to play its hand, and then I tend to like to just try and follow that. Don't try and predict it. I don't necessarily try and get ahead of it. Okay, I look for points where the market has to make a decision, and then from that, then look and try and follow that. Okay, just surf the wave. Don't try and fight it. Okay, and I'm not. I'm here to be a profitable trader and investor. I'm not here to to polish my ego or to make myself feel good or to be able to sort of claim that I made a great prediction. Okay, I don't really care about that and stuff. It's about actually just where's the market got to make a decision, it plays its hand, and then I'll just follow that, which you might say that is one definition of a momentum trader in itself. But I would look at that as it's a bit one of the losers, certainly this year, certainly the reopening, and I would just be watching that. Okay, just add that to your watch list, ladies and gentlemen. Here's another interesting one. I talked about how online retailers have done very, very well, and then on the flip side, the kind of, let's call it, bricks and mortar retailers had been struggling. This is actually a monthly chart, and I put it in because it gives us a bit of a little bit of just a bit of reference. Okay, so this is a company in the UK called John Lewis. They are you would probably describe them as kind of higher end of the high street shop retailers. They have big department stores on all the big main shopping streets. But their online offering not slick perhaps as certainly as in things like Amazon, etc. People who shop there might disagree, and that's absolutely fine. Okay, I don't consider myself to be a retail expert in terms of either trading or in terms of actually going out to do shopping, right? But what I am looking at here is this is the monthly chart, and the reason I added in this is just this is an interesting kind of maybe a value player that's of interest. Is that, as I said, it's a monthly chart here. The price has really been down right on its lows. Okay, nothing terribly exciting there. Okay, but what is interesting is this spike that we've had. Okay, it's a couple of days ago. And what's interesting is that, as I said, these are it's a high street department store. Okay, that's predominantly what they have been for as long as they've existed. But what they have actually looked to do is they've announced is that they are going to start building rental homes. Okay, I'm not sure if it's like 10,000 or 100. I think it might actually be 100,000 rental homes that they are going to look to build, basically using some of their existing property stock and also just basically just new build rental properties as well, which is quite some pivot, isn't it? I think that's quite some pivot from being a high street department store to actually starting to buy and run rental homes. Okay, it's almost like turning into a property company or an element of a property company, and I find that quite fascinating. That this is them pivoting as a company based upon how the world is shifting, the world is changing, and where the new supply and demand is. And so that might well be something that is actually of interest as a value play, because it might be something that, if it works well. Certainly here in the UK, there's that demand. There's still that demand for property. There's just not enough. And what people forget is, the last 15, 18 months is, there's still people coming into the country, still people being born, still people growing up, okay, still people becoming adults, but nobody's been building homes, okay, for the last 15, 18 months, and it was already struggling, and people haven't really been building homes in any kind of pace. There's a little bit of building going on, but invariably, so what you've got is you're getting increased demand, but supply is getting squeezed as well, which invariably is likely to sort of, drive prices higher, which is actually what has been seen, okay, in certain parts of the UK. And I just added that chart because I thought it was kind of an interesting little snap, a little cheap play, a play about how companies are having to pivot and change, some of them, in order to adapt to this kind of new world order that we are looking to be told to live in. And then, as I said, airlines, this is IAG. Okay, so, the Consolidated Airlines Group, so, Iberia, British Airways, etc., those kind of Aer Lingus, etc. So, if we look at it, this all started to kick off here, didn't it? This all started to kick off here, as that is, let me just clear this out. This is a head and shoulders here. That is a head and shoulders pattern there, okay? And price, as you can see, utterly collapsed, okay, and continued to do so down to October. And you can see that, from the October lows effectively at a euro and stuff, that it has basically, prices drifted its way up, but it's still, nowhere near where it was, before, pandemic. So it has been a loser. And if you look at it, it has continued to lose, okay, as I think that as talks about third waves happening, slowing, opening up, talks about countries not being on green lists or on red lists and not being able to travel, people, lots of politics in the EU, etc. All of these things weigh onto that, and I'm still not terribly excited by this. So, as a momentum trade, I don't particularly see anything there for me. But as I said, if you're a value play, well, this might be something that you think, well, it's not going to, the price isn't going to come back this year, but 2 years from now, we might be in a very, very different position. That might be the opportunity, one of the opportunities you're looking for. So you might want to add that to your particular watch list. And, if we look at, I think airlines, this is Ryanair. Okay, so Ryanair here, this was its pre-COVID high. You can see for yourself, it dropped down there to that kind of 850 euros, and it double bottomed. You might actually say it triple bottomed, and it did work its way up, and it has tried to get to highs, but it's not terribly convincing, is it? I don't think it's terribly convincing. I think that's just batting around between 15 and 17 euros there, and it's batting around there. And so once again, this is a question is, I don't see it as a momentum play unless it breaks out, okay, like you saw on Amazon earlier. But it might be a case of some people might say, well, actually, Paul, compared to what the price longer term, much longer term is, this is there is value there, and you're likely to hold it for so long. Personally, I think we need a little bit more time before we start to see, how well airlines are doing. Okay, whether there is the demand comes flooding back. I don't doubt that there is demand for holidays because we've all been cooped up, but whether that will continue after that, we shall have to wait and see. And on that, if airlines are struggling, well, then they're not buying airliners, are they? So not in the same frequency that they have been. And so, this is Airbus, okay? Weekly chart of Airbus here, okay? Here we had the pre-COVID highs. Bosh, look at that, how that dropped, okay? So from being around about 148 euros, we dropped down to just beneath 50, about 48 euros. That's a considerable drop, isn't it? Okay, and that's not surprising, because basically the aviation industry effectively collapsed. Nobody's buying airliners for that, aren't they? And and so now what we can see is that price has, it has ground its way up. It has ground its way up in a kind of, I'd say it's like in steps and blocks. It's worked its way up there, okay, but it still hasn't got anywhere near the pre-COVID high, has it? We're up above 100, okay, and I'd be saying, of course, 100 is it's a big round number, okay, psychological level, but it's doing that. But it's a case of I don't see it sort of doing that. And in fact, if anything, we can see that this section here around about 115, 16 euros, it has to break beneath that. Okay, so if price comes down, well then, as I say, once again, you might consider that to be a bit of a value play, all right, for a longer term, and if it rolls over, well then invariably, it might be a case of, you get a price that some people might say, well, this is actually, the price is just, has risen because effectively, it's subsidized by the EU in the same way Boeing subsidized by the US in its own way, and if you look at Boeing charts, it's, it's not massively dissimilar to that. Okay, you've got the two big major airline producers, manufacturers. There hasn't been massive demand for airlines. Now, I know some airlines have been using this as an opportunity to basically change their fleet and into more economical aircraft and what have you. Some will be doing that, but generally, people aren't buying airlines in the kind of the pace and speed that they were a few years back, and that shows in the chart. And talking of holidays and stuff, I appreciate the time is that is a case of, this is Carnival, all right, Carnival Cruise Lines, okay. So he was already struggling. He was already struggling a bit. You can see there, okay, struggling a bit there. That was the pre-COVID high. It collapsed, and it's not really coming back, isn't it? It's ground up a bit, but it's nothing really to get excited about there. From what was $52, all right, $52 before, it's been as high as about $30, but now it's trading around about 25. Okay, so it's still about half of what it was before, and then it had already been in a particular downtrend. So the question we've got to ask is, how quickly and how soon are people going to want to go back booking cruise lines, okay, based upon what they've gone through? How soon will people forget about those images of cruise liners being turned away from ports, from people being, quarantined on them? How soon will it take populace to forget those kind of images? And that's what you're looking at there. So, as I said, once again, you'll be looking at this more as a bit of a value play. I don't think it's a momentum trade, right? This would be a case of, some people might say, well, $25 is cheap, because I know it has been up to $75, so it could go that again. The question is, what would drive and make that particularly happen? So there you go. Here's a couple of final points. Is that, I saw this the other day. Analysis from Bank of America showed that inflows into equity funds climbed to approximately $550 billion, right, for the first half of 2021, which I believe is a new record. And if inflows continue this way for the rest of the year, the total for equity funds will be more than the past 2 decades combined. Think about that. Right? It'd be more. It could be this year. So, of course, you have to think, if all of that money flows into equity funds, it has to find somewhere to go. So you have to start thinking, how will that impact equity markets going forward? What will be the move on that? What will happen to some of those unloved value plays? Will that make them more attractive? Okay, because there will be money that will just need to find a home, or will money simply flow into those US tech stocks? It will just be more momentum plays, okay, as markets just do that. And that is, I think, is what we're going to see. I think we'll have a little bit of a summer lull, but from September onwards, that's when it's going to start to get exciting, okay. And that will, as always, that will provide opportunity. So make sure that you're properly educated and ready and prepared. So to finish up, ladies and gentlemen, the COVID pandemic of 2021, had a huge impact on both humans and markets, and there were clearly some winners and losers in the stock market, as we've seen. And as economies have started to reopen, that has also had an impact on financial markets, which, as always, it provides either a threat or an opportunity. If you're educated, it can be an opportunity. However, it's important to utilize the correct rules, okay, to understand whether you're a momentum trader or whether you're a long-term investor looking for value plays. There is a huge sum of money flooding into equity markets in 2021, and that will also provide huge opportunity as that wall of money needs a home. Now, unfortunately, we're as always, we've kind of run out of time a little bit to look at live markets, but don't forget to join us next time, ladies and gentlemen. Okay, same time on Friday. Join my colleague Jens to understand defining a trading plan and formulating a trading strategy, including definitions of trading plans, formulating trading strategies, our trading strategy bulletin, and a profitable strategy for you to trade. That will be on Friday, 9th of July, 2 o'clock London time. Check your inbox for the webinar link. And if you wish to contact us, you can see the contest details are there in particular. So there you go, ladies and gentlemen. I appreciate we overran a little bit. There's lots I wanted to share with you there, but I hope you found that useful. I hope that's given you a little bit of food for thought you can take away and start to have a look at for your own options and opportunities going forward. As always, as I say, please make sure that you look to subscribe on the YouTube channel. If you found this useful, give us a like. If it's not been helpful to you, that's okay. You can give us a thumbs down. Maybe you've got ideas and thoughts about future topics you'd like us to look at. Put that in the commentary box. And also, if you look up there on YouTube, you'll see that there are links there, okay, taking us to all the sort of vast amount of resources that you're available to access with Admirals. As always, I'd like to wish you the best of success in your own trading and investing, and I look forward to speaking to you soon. And trade well, ladies and gentlemen. Have a good day. Thanks.